Hello everyone and welcome back to another market review. This is Silunt. Today we're looking at the NASDAQ December contract for 2025. Starting off with the weekly chart, I've added a couple of levels on here showing the small fair value gap here. I left on the 25% of this previous wick here, and I've added the weekly wick constant encroachment here, 938. And we delivered strongly through that so far this week. I want to see if we can get a sustained run to stay above this previous week's high. If we fail to do that and start dropping back into the range, I'm going to be siding with needing price to stay above the 938 level. So long as we can stay above the 938 level, I'm going to remain bullish and keep my expectations that this weekly candle should settle anywhere from 938 to the high that it's created so far this week. On the daily chart here, I've added a couple of levels. Firstly, I've noted the daily wick constant encroachment here at 25,142, and I've also noted the buy side imbalance that was created after today's candle closed, and I've also noted the daily rejection block here, and we can see how price opened up inside of that range today, dropped down to the low, which is the closing price of this candle. We dropped down into that and then began rallying. Price trades up and then comes off with a high and leaves that wick there, and after we closed today I measured half of that range. Going into tomorrow, I would have an expectation of revisiting that 142 level first and see if we can explore a new high on the week. But if we begin rejecting the 142 level, my expectation would be to see price trade back down into the daily buy side imbalance here. And having a retracement like this gives us that idea of a TGIF pullback. So going into tomorrow, keep this fair value gap here on your radar, so that if we do start dropping lower, this is going to be our expectation. Again, we want price to stay above that weekly wick constant encroachment level at 24,938, which lines up just above the low of this daily buy side imbalance. So if we do retrace back into this, we want to limit our focus to 938. So from as high as 142 down to 24,938 would be our range to work with. It leaves part of this gap undelivered if we cannot breach the 938 level, which is good. We would want to see this gap stay partially open if we're going to have expectation for bullishness next week. On the 4-hour chart, we can see that daily wick constant encroachment is just above half of this large wick from the 4-hour. I've added this buy side imbalance here, and also I've extended this buy side imbalance here on the 4-hour chart just so it's easier to see, and we've limited our scope to just this rally. So coming into tomorrow, if we rally up through the 142 level, we'll be expecting a higher close on the week. But if not, if we see some sensitivity at 142, some trading above it and then break lower, we're going to be bringing our attention back to the daily wick high and that rejection block at the low end of that pink shaded level. And if we can start dropping strongly below this buy side imbalance, we're going to be working with that large daily imbalance as a draw on liquidity. On the 1-hour chart, I've just got a weekly outlook. So far on the week, we've opened up, prices rallied, dropped lower, and consolidated a lot on top of that 4-hour buy side imbalance. Going into the next day, it is a large consolidation that day as well before running up higher into this imbalance before turning lower one more time, sweeping out all those lows and retesting the daily buy side imbalance. price has a reversal here and begins supporting that 4-hour buy-side imbalance again. We launch higher, going into all-time highs, and then overnight we consolidate with a slight rally afterwards. Going into midnight, there's a consolidation with a grind up all throughout the London session and pre-market. Then as we get to close to 10 a.m., we have a sharp decline, and then price drops back down into the daily level and that 4-hour level before turning around and retracing to end the day. And we settled inside this hourly sell side imbalance here. On the 15-minute time frame, I've just limited our scope to the new day opening gap and beyond. So as we open up and then start Asia produces this rally. Going into midnight, we consolidate, and then as we open London, we begin a rally. Price breaks up here, retraces down into this imbalance, and rallies, going into 1 standard deviation and 1.25 standard deviations of this Asia range. So I've taken a fib from the low to the high of this range and casted it higher, 1 and 1.25 standard deviations. After reaching up into this range, we reject sharply, and this move, it's pretty much the main move of the day. It takes out all the liquidity that was built up through London. We have a retracement into this large 15-minute SIBI. Price breaks down lower one more time and fails to have any candle bodies start closing below that low. So this is a suspect drop that may lead into a turning point from the new day opening gap if we begin breaking higher. We see a shift here above this high, and then every consolidation following that, we utilize the down close candles as support. And then every retracement after that, we begin utilizing the down close candles as support, which drives us up into that large hourly sell side imbalance. And we're starting to respect the constant encroachment of that range with the candle bodies here. On the 5-minute chart, again, we can see that consolidation as we leave midnight and Asia range, and all the way going into London, we just get our initial signs of a pump about to occur. We leave this imbalance here, price retrades back down into it and rallies a couple of times, starts to consolidate, drops lower under some sell side, has another reversal here, and then accumulates at the higher end of this range and drives us into 1 and 1.25 deviations of the Asia range. And then we have that turning point. Price sinks below strongly. We have a retracement, and then after we retrace, we begin sinking lower again. Price drops down and closes below the low there, but is immediately bought back up. We rally one more time. Price rejects this high, sells lower, and cannot produce a new low. So failing to create a new low there, we start to have warning signs that maybe a reversal is about to occur. We see a large rally from there, and following that, we consolidate inside this buy side imbalance here, and then start to rally going into that higher time frame level. On the 1-minute chart, this is a couple of the levels that I was looking at for that execution video that I posted. We left the first presentation fair value gap completely open today, and then all throughout the morning session and going into lunch, we kind of consolidate. And at the end of lunch, at the end of the AM session, we start to give signs of a accumulation happening whenever this drop fails to go any lower than the current low of the day. So we get this drop here. Price should have reclaimed this imbalance as a SIBI and sold off from the SIBI that overlaps it on this displacement lower, but it doesn't. Instead, we rally above it and begin utilizing it as an inversion array. Price rallies strongly from that inversion fair value gap, leaving an imbalance here and an imbalance here. Price rejects that imbalance on this rally here and sinks down into the lower buy side imbalance. And then we begin marking time. We spend a lot of time in consolidation before finally getting a strong drop lower, and price overlaps that SIBI that is created here on this drop. Price overlaps all of that range and leaves a buy side imbalance in its wake. So every time we retrace into buy side imbalances following this, we should have a bullish expectation because our draw on liquidity is that first presentation fair value gap. So staying in consolidation between these two boundary points, then having our first indication that a bearish move failed to come to fruition, we get a warning sign that that is inverted and this should be supported. Price supports another rally here and continuously rallies as we come back and reference fair value gaps on the way up until our first presentation fair value gap is delivered. So that's going to be it for me today. Hopefully you learned something. If you found anything insightful, don't forget to leave a like, a comment, and subscribe. I'll see you all tomorrow.